your roadmap to the latest in auto. Welcome to Highway Herald, where we dive into the engines that power cars and the policies that drive the industry. Canada just hit the gas on a financial shift, issuing major foreign bonds without any U.S. banks. Ontario and Alberta are now turning to Barclays, BMO, and Scotiabank. For the auto sector and beyond, this is more than a money move. It's a bold recalibration. Capital is flowing differently now, and it's about to change who controls the road ahead. Buckle up. Number 5. Tariffs set off a financial aftershock. What started as a tariff dispute has evolved into a financial realignment. In June 2025, Ontario issued a $2 billion 10-year Yankee bond, its first in over a decade without involving U.S. banks. Barclays, BMO, CIBC, and Scotiabank led the deal, sidelining Wall Street institutions like JP Morgan and Bank of America. This follows aggressive tariffs from the Trump administration on Ontario's steel, tech, and auto sectors. In response, Premier Doug Ford's government enacted procurement policies that deprioritize U.S. firms. While officials claim the bond decision was competitive, the absence of American banks is telling. Ontario, home to GM, Honda, and Ford plants, is now realigning its financial relationships. With $60 billion in borrowing planned this year, 30% from foreign sources, its partner choices will reshape future capital flows. The message is clear. Ontario's financial engine is pivoting toward Europe and beyond. And as the province with one of North America's largest auto industries, this redirection could ripple across the entire sector. But Ontario isn't navigating this shift alone. Another province is quickly following suit. Number 4, Alberta changes lanes, and Europe rolls out the welcome mat. Alberta isn't sitting idle. It's shifting gears right alongside Ontario. In March 2025, the province issued a 1.25 billion euros, $1.4 billion US dollar 10-year bond with no involvement from Bank of America, a first in 6 years. The deal was steered by Barclays, RBC, and TD Securities, marking yet another departure from Wall Street. Though Alberta officials insist U.S. banks weren't explicitly excluded, the message is clear. Canada is reevaluating its financial alliances, and Europe is stepping into the spotlight. That realignment extends beyond capital markets. Alberta's oil exports are charting new courses, with tanker routes opening to Asia and the Gulf of Mexico. European insurers and financiers are stepping in as local institutions increasingly look to Frankfurt over DC. Even pension funds are pivoting, shifting meetings from New York to London swap desks. It's a quiet revolution, but one gaining volume with every bond issued and trade rerouted. And for Alberta's commercial vehicle and transport sectors, this shift impacts everything, from energy logistics to the financing of heavy-duty fleets. The road ahead now runs through Europe. Before we delve deeper, we'd appreciate it if you could subscribe to Highway Herald. Your support fuels our passion to bring you powerful, policy-driven auto insights every week. Now, let's look at how these financial shifts are already reshaping what governments buy and who gets to supply it. Number 3, from procurement to priorities, the new North American shuffle. U.S. tariffs didn't just hit trade, they're influencing what Canadian governments buy and who they buy it from. Ontario's new provincial procurement rules now give preference to domestic and allied country vendors over U.S. suppliers. From software systems to structural bolts, the playing field is being reshaped. One telling example: a hospital system in Ontario opted for a bid from Stockholm over Seattle for its core software upgrade. The cost, once adjusted for currency fluctuation and political risk, simply made more sense. Multiply that across the public sector, and you've got a quiet revolution in motion. And yes, it's affecting auto parts. With U.S. materials now a secondary option and Canadian steel mills moving up the supply chain ladder, Ontario's assembly lines could see tighter, more nationally aligned sourcing in the near future. British Columbia may be treading a different path by keeping U.S. banking ties for now. But across the provinces, one thing is clear. Canada's engine is humming to a new tune, and the U.S. isn't in the driver's seat anymore. But this procurement shift is part of a much larger change, one that's shaking confidence in the US dollar itself. Number 2, cracks beneath the dollar's reign. As Ontario and Alberta distance themselves from US banks, subtle but impactful shifts are emerging in dollar-reliant financial systems. In Vancouver, commodity traders report rare after-hours liquidity issues with US dollars, conditions not seen since the 1998 Asian financial crisis. Canadian financial institutions are now aligning with the European Central Bank's yield curve, signaling a gradual move away from the US Federal Reserve's influence. Despite massive capital flows, $1 trillion from Canada to the US, $500 billion the other way, hedging and risk buffers are now being built in. A Boston-based fund manager even hedged against long-term trade instability while keeping Canadian assets. On the ground, the impacts are tangible. In Thunder Bay, a solar panel firm gained local market share due to Chinese tariffs, but then suffered delays from a copper shortage tied to Shanghai shipping disruptions. The bottom line? Minor shifts in banking policy or dollar liquidity can ripple through global supply chains, affecting everything from shipments to payrolls and production. And nowhere is this more evident than in the auto sector, where financing is starting to influence where and how vehicles get built. Number 1. Shifting gears. What's next for Canada's auto-industrial powerhouse? The real proving ground for this quiet financial realignment? Ontario's auto sector, home to industry giants like Ford, GM, and Honda, as well as thousands of Tier 1 and Tier 2 suppliers. Ontario sits at the heart of Canada's vehicle manufacturing ecosystem. When capital flows shift, it doesn't just disrupt bank ledgers. It reshapes financing for EV plants, changes the scaling trajectory for battery tech startups, and influences which infrastructure projects get a green light. As Ontario leans more into European or Asian capital markets, electric vehicle projects may soon rely less on Wall Street and more on euros or yen. That could open doors to flexible financing, or introduce new political expectations and regulatory strings. Meanwhile, fossil fuel-heavy provinces like Alberta may face tougher climbs. European investors are increasingly ESG-focused, meaning oil-linked projects might struggle to secure funding or face higher borrowing costs. This financial pivot now demands automakers consider more than labor or tax incentives. Where the money comes from, and the geopolitical values tied to it, may steer the next generation of auto manufacturing in unexpected directions. So what does all this mean for North America's industrial future? Final verdict, beyond tariffs, toward a new industrial reality. What started as a knee-jerk response to US tariffs has evolved into a full-blown strategic realignment of Canadian finance, and its ripple effects go far beyond bond desks. By sidelining US banks in major provincial deals, Canada is doing more than protesting. It's rethinking the foundations of its financial partnerships. From Wall Street to Windsor, and from oil terminals in Edmonton to auto parts hubs in Oshawa, this shift is reshaping how capital moves and who gets to move it. New deals, new partners, and new priorities are emerging, and they're all being written on Canada's terms. So, where is this headed? Tell us what you think. Are US banks gone for good in Canada's next financial chapter? Could this shift decide where your next vehicle is built? Are we watching a North American economic divorce unfold? Drop your thoughts, reactions, and predictions in the comments section below. We read every one of them. And if you haven't already, be sure to subscribe to Highway Herald and tap that bell so you never miss an update on the vehicles, policies, and deals shaping our roads. Thanks for watching and see you next time. You can now check out any of the videos on the screen. There's more exciting and informative content waiting for you.